Do you want to know how to get financial freedom? Come along as we investigate the fascinating world of Tesla and see how it can help you achieve financial success. What recent events have investors interested and created a sense of urgency? How does Tesla differentiate itself from the competition with its innovative approach to electric vehicles? What variables affect Tesla's stock price, and how much room for development does it have? Can the company's high brand recognition and dominant market lead to incredible returns on investment are prepared to set out on a financial freedom journey with Tesla? Don't pass up this fantastic chance. This movie will provide you an understanding of the current situation and the urgency surrounding Tesla. It talks about the competition that Tesla confronts from growing capital costs. Other EV manufacturers. The film discusses Tesla's production capacities, supply chain advantages, and expansion ambitions, in addition to examining the company's foundations, effective leadership under Elon Musk, and technological superiority in electric vehicles. Now that you've hit the like and subscribe buttons, let's get the video going. Viewers are invited to support the material, remain up to current on Tesla's actions, and express their opinions and valuations in the comments section. The market's reaction to the letter that the CEOs and leaders wrote just over a week ago is evidence of the urgency that has increased significantly. When asked what has changed recently on their end, Charles Phillips, Recognized Partners, managing partner and co-founder, responded that the urgency coincided with our annual meeting, where all of our technology companies and investors were present. Usually, discussions revolve around technology advancements, valuations, and operational improvements. However, now that we have to address this pressing issue after going through a banking crisis and resolving SPD issues, there are many electric vehicle EV companies in the world today, and many people think that one or more of them will eventually overtake Tesla in the market. Analyst opinions provide insight into how these competitors compare to Tesla. However, the uncertainty of whether the cost of capital will rise in the next month, 3 months, or 6 months is creating chaos and discomfort in this planning aspect. What effects will this have on Tesla's future, given that major EV manufacturers like GM, Ford, and Volkswagen have their own ambitious plans? The principal, also known as original equipment manufacturers, are doing rather well in terms of ratings. They are concentrated around 62, 69, and 65, which denotes low risk. Over the past 20 years, over 90% of the companies that failed had ratings of 40 or lower. Hence, businesses with a rating of 60 are regarded as fairly solid. What makes Tesla unique is its pricing strategy, which is clearly visible right now. This allows them to take market share at a time when consumers are reluctant to purchase new cars because of skyrocketing prices. The automotive industry, like many other industries, is facing a perfect storm due to high inflation, recessionary concerns, the EV transition's increased costs, and supply chain challenges. Let's examine Tesla's fundamentals in more detail. Over the last 10 years, the company's stock has seen incredible gains of 8,535%, outperforming returns on the Nasdaq 100 and SP 500 index by 348.9% and 187.6%, respectively. This means that Tesla's share value has increased at a compound annual growth rate of 56.8%, which is an impressive number, but the journey hasn't always been easy. After the U.S. Federal Reserve's hawkish actions, investors' risk aversion, and changes in the macroeconomic environment caused the stock to decline significantly. Since then, Tesla has seen a series of ups and downs, leaving many to wonder if it's a wise investment. Tesla reached its all-time highs in November 2021, with shares priced at $414.50. The visionary's Tesla-led Elon Musk is renowned for having achieved. Businesses like SpaceX and PayPal have gained a great deal of investor trust due to their revolutionary leadership and sustainable commitment to reducing carbon emissions. Gained international attention as a pioneer in the electric vehicle market with a strong brand recognition and a leading market share, Tesla is well positioned to capitalize on the expected surge in demand for electric vehicles in the coming years. Before we get into the specifics, please show your support by liking this content, subscribing to our channel, and turning on notifications to stay up to date with all things Tesla. In the first 9 months of 2022, Tesla reported total revenues of $57.1 billion, the majority of which were generated from vehicle sales. During that same period, Tesla produced 929,910 vehicles and delivered 908,573 units. Although a difficult year of supply chain disruptions, Tesla's success is largely due to its advancements in electric vehicle technology. The company has made significant strides in battery technology, autonomous driving capabilities, and charging infrastructure. These technological advantages give Tesla a competitive edge in the market and set its products apart from those of traditional automakers. As Tesla looks to the future, its production capabilities are rapidly expanding to beat the growing demand for its vehicles. The company operates gigafactories in the United States, China, and Germany. Tesla has experienced some normalization and cost inflation, which has given the automaker the confidence to pass these costs onto its customers, permitting more output and more cost effectiveness. Through this growth, Tesla is able to increase its market share and possibly even realize economies of scale. Analysts at UBS haven't emphasized Tesla's edge in obtaining vital parts like transistors and batteries. They predict that batteries will be the next major industry bottleneck, but Tesla will have an advantage over rivals due to their in-house cell production and easier access to raw materials like lithium. Along with the growing interest in electric vehicles, the investment bank claims that Elon Musk's substantially superior supply system will enable Tesla to grow faster and more profitably than other legacy automakers. Tesla recently increased its 2023 capital expenditure estimate. The business intends to boost production at its facilities in order to capitalize on this expanding market. This year, Tesla anticipates spinning up between $7 billion and $9 billion above its earlier outlook. $3.6 billion will be invested in the expansion of its Nevada Gigafactory complex, where the much anticipated semi-truck will be mass-produced together with a plant capable of producing 46.80 cells. Additionally, the 4,680 cells have the capacity to generate enough batteries annually for 2 million light-duty vehicles. In an effort to increase its output globally, Tesla intends to build a gigafactory in Mexico, in addition to increasing production at its facilities in Austin and Berlin. Furthermore, there are speculations indicating that Tesla has started manufacturing a Shanghai-specific Model Y variant intended for Canadian markets. With its innovative leadership in technology improvements and growing manufacturing capacities, Tesla is demonstrating its commitment to serving global demand by shipping cars to North America for the first time from China. Tesla is in a good position to set the standard in the quickly expanding electric vehicle industry. Known for its electric cars, Tesla has expanded into the energy industry by creating and marketing energy storage products like the Powerwall and Powerpack, which are used in both residential and commercial settings. By entering this market, Tesla is able to take advantage of possible growth opportunities. Macroeconomic variables such as interest rates, which have the tendency to depress equity valuations, could have an impact on Tesla's stock price in the future years. This would allow for more diversification beyond the automotive industry. Furthermore, rising rates may result in less demand for cars because of higher financing costs, even if they will face more competition from other EV specialists like BYD. Tesla stands out among automakers for a number of reasons. During Tesla's Q1 earnings call, CEO Elon Musk stated that the company could sell electric cars at zero profit and still make money through its autopilot technology. Tesla has maintained stellar profit margins of over 20%. The company has implemented multiple price cuts in the United States, China, and Australia to protect its market share and exert pressure on rival automakers. Being the only automaker able to create vehicles that might theoretically be sold for a loss while still having the potential to generate considerable revenue from autonomous driving technologies in the future, Tesla enjoys a distinct strategic advantage over its rivals. With the help of its cutting-edge features and impressive performance range, Tesla has built a devoted and enthusiastic following of customers. The company has also been successful in building a strong brand image. The business has a devoted following among early adopters, environmentalists, as the data from the SP suggests that there might be other cars on the market that could take some of Tesla's market share. During the first 9 months of 2022, global sales of Tesla vehicles accounted for 65% of all electric car sales in the US. This shows how dominant Tesla is in the market, and how difficult it will be for any other automaker to break the record that concludes this film. If you enjoyed this content, please hit the like button and remember to subscribe in different languages. I hope you gained some knowledge that will help you earn more money.